Namaste. What is the share of Reserve Bank of India in the stimulus package? Its share and its impact on the economy. Yes, the share is very big, though not lion's share. It's huge. Nirmala Sitharaman, while concluding her packages, she released 5 packages in succession, one after the other, and 5th, she has given the Reserve Bank of India's share as something like 8 lakh crore in a little over 20 lakh crore total package, which works out to 40% of the total package and then 4% of the GDP. Then what did Reserve Bank of India do? If I say that the Reserve Bank of India has ensured the liquidity in the banking, and it has reduced the CRR, BR, bank rate, repo rate, reverse repo rate, ways and means, and several such esoteric things. Yes, it look something tough, not easy to understand, not intelligible for a layman. What exactly are they and what is the effect? We have got to go a little bit deeper into that. Then first let us take CRR, cash reserve ratio. What is the cash reserve ratio? Cash reserve ratio is that proportion of the bank's deposits which is to be kept with the Reserve Bank of India as per the Reserve Bank of India direction. That CRR is used to be 4% before 22nd May, and it has come down to 3%, 1% reduction. What does 1% amount to? Is it too big, 1%? Yes, it is. Taking into account the quantum of bank deposits today, this 1% works out to 1.4 lakh crore. So, of the bank's total deposits, 3% has to be kept with the Reserve Bank of India instead of 4%. That is what this CRR means. So, 1.4 lakh crore extra money banks are getting to lend to the productive sector. The second thing is, yes, the bank rate. The second is the bank rate. The bank rate, it has reduced from 4.65 to 4.25%. What is bank rate? In simple terms, it's a kind of reference rate. It is RBI's rediscount rate. What is rediscount rate? Quickly. Supposing I have to get some 100 crore rupees from somewhere else to me, to whom I supplied goods. Then I go to the bank, and 100 crore is due to me from somebody, and which will come to me, let's say, after 3 months. Then I ask the bank, you take this today and give the money to me. Then the bank would say, okay, I will give it to you. We will collect the money that is due to you from whoever it is, because you have that bill of exchange, you are giving that to me, we will discount it. That we are not going to give you 100 crore, instead 95 crore. So bank will have a cut 5 crore. Then banks too need to have money. Then they go to the Reserve Bank of India, make the same request, give them the money. Reserve Bank of India doesn't give 100 crores again, as the banks didn't give to me. They say, yes, instead of 100 crores, we give you 98 crores. Okay, Reserve Bank is giving 98 means it's having its own cut. When it gets 100 crores, 2 crore, that is the rediscount. Whereas bank is benefited because it has given me 95 crore and getting 98 from Reserve Bank of India, 3 crore is it? 3 crore is it benefits. Not getting into those account details, the banks have discounted my bill, and that bill is rediscounted. That is the rediscount rate. So that is one use of the bank rate. The other is, whenever the banks default on certain things, I am not going again into details, the Reserve Bank of India levy the penalty, the penal rate. That is with reference to the bank rate plus. So that is the bank rate. The Reserve Bank of India has cut the bank rate from 4.65 to 4.25, which means the borrowing of banks from the Reserve Bank of India has become cheaper to that extent. Then the Reserve Bank of India has reduced the repo rate from 4.4% to 4%. That means 0.4% benefit to the banks. How? Repo rate. What is repo rate? Repo means a repurchase option. What is repurchase? What is purchase first and then what is the repurchase? Banks borrow from Reserve Bank of India for their short-term requirements. They go to the Reserve Bank of India and they pledge securities, which mean banks lend money to government. Government gives them a security, a bond, that I owe you kind of thing. So that is an instrument, that is a security. So this security is pledged with the Reserve Bank of India. And Reserve Bank of India gives a loan to the banks against the security. But the banks have got to take back their securities, paying back the money that they take from the Reserve Bank of India, which means they pledged, they sold to Reserve Bank of India the securities, but they will purchase them, they repurchase. The option is to repurchase the securities, take back the securities and pay the money. At what rate? That rate now Reserve Bank of India decided is a little lower than what it used to be, 4.65% to 4.25%, which means borrowing from Reserve Bank of India has become cheaper, whereby banks can borrow from Reserve Bank of India and they will have more money with them. Is another facility the Reserve Bank of India has given. Then Reserve Bank of India has also reduced the reverse repo. Reverse repo is nothing but the reverse of the repo operation. That here the borrower and lender roles change. In the repo operation, it is the bank that borrows. In the reverse repo, the banks lend to the Reserve Bank of India. That rate has also come down 3.75 to 3.35%, which means the interest that the Reserve Bank of India give to the bank also lowered, which means it is no incentive to keep money with the Reserve Bank of India. So the banks will take money out of Reserve Bank of India. They don't go and invest their surplus funds with the Reserve Bank of India. Instead, they go and give it to the productive sectors. That is the idea behind this. By doing this, what will happen? The liquidity will increase. What is the liquidity? Liquidity is the money with the banks will increase. They will have more money. That money they can lend is the idea. Then do banks need additional money? The liquidity, the bank deposits, latest figures show aggregate to 138.50 lakh crore, 138.50 trillion rupees, which equals 68% of the GDP, gross domestic product. Huge sum. And out of this, the bank have given as loans and advances 102.52 lakh crore. Then banks have invested with the government in the government securities, central government securities and other approved securities, as much as 40,28,000 crore. And this 40,28,000 crore constitutes 29% of the bank deposits. But as per the Reserve Bank of India's stipulation, under statutory liquidity ratio, banks are supposed to invest 18% of their demand and time liabilities, the total deposits. But whereas they have invested 29%, 11% higher than the requirement, but they have invested 15.35 lakh crore higher than the requirement, which means banks are not suffering from want of funds, they are flush with funds. They could give even this much also as loan to the industry, agriculture, etc. But they have not given. Also, Reserve Bank of India found that the banks during March 1 to 25, 2020 were having 2.86 lakh crore in the reverse repo daily averages, which means, of course, there is an asymmetry. They say that not all the banks were doing like this, but still, on the whole, aggregate sum is so big that the banks themselves were lending to the Reserve Bank of India. Whereas the Reserve Bank of India wants to encourage the banks to take funds from the Reserve Bank of India by reducing the repo rate and reverse repo rates. Then what are the other measures that the Reserve Bank of India has taken? Ways and means advances. What are the ways and means advances? It is also another statutory provision under section 17(5) of Reserve Bank of India Act 1934, where the Reserve Bank of India should help the governments, state and central governments, for a short period like 3 months, when there is a mismatch between the government revenues and expenditure. If there is a shortfall in their tax revenue, non-tax and other revenues, and expenditure is high, salaries and other things, then the RBI goes to their rescue and gives money to meet this contingency. That amount also has been increased because of this as a part of COVID related plan. And the other measure the Reserve Bank of India has done is the expansion of refinance, supplying more funds to the SIDBI, Housing Bank and NABARD, Refinance Bank. What is Refinance Bank? Supposing a bank lends to a farmer, say some 1 lakh rupees. Then the bank goes to the refinancing agency, NABARD in this case, to lend to it. First bank lends and NABARD refinances. So this is the fund scope for the banks. In addition to their deposits and other sources, they also have a refinance facility. So by giving more money to SIDBI, Housing Bank and NABARD, the Reserve Bank of India expects expansion of credit. But the ground realities, as we have seen, there is no funds capacity. Now we have to see after these measures to what extent the credit has expanded. I will go in detail into this in a separate video. We'll try to show if the goals of the Reserve Bank of India through these measures have been efficacious. Thank you for watching my video. Please subscribe to my channel if you have not done already. It's free. Please click on that subscribe button below this video. After that, will you please click on the bell icon also to get the notifications as and when I upload a new video to my channel. Thank you very much. Thank you.